I don't think I shared the screen. Hold on 1 second. Are you guys seeing my screen?
No.
Nope. Share screen. Uh-oh. Host disabled the participant screen sharing. Whoops. Taylor, are you still there? Can you let me share?
Yes, it says you are co-host. Let me try again.
It told me that I was disabled, or it was disabled.
Okay, so I got you. Try now.
Okay, there we go. Okay.
There you go.
Okay, so good afternoon, everyone. My name is Chris Hughes. I'm with the San Antonio chapter of SCORE, which we'll get into in a couple of seconds. And I'm going to give a brief presentation about what we consider to be the fundamentals of starting and running a successful business, and then turn the Q&A session over to the panelists. And let me introduce those folks to you real quickly. They're all part of the SCORE San Antonio chapter. So Larry Hobbs has been in the human resources for more than 30 years and is expert on that and labor issues, which we'll get to a couple of questions with Larry a little bit later about that. Susie Quintana is a business owner in the health and fitness arena. She's also a member of the SCORE chapter. Steve Jones has had a career in marketing in some Fortune 500 companies and in promotion and can address questions about that portion of a business. John Millice is a CPA. He's been in the accounting world and finance and tax world for longer than he'd like to say. I've been in the manufacturing arena and manufacturing and management in a variety of different industries. And Chris Zeis is a technology expert and able to address questions in that arena. So let me tell you first of all about SCORE. If you don't already know, we are a national organization. We are what's called a resource partner with the SBA, which is why you see their logo behind me as well. They partially fund us. But we are a volunteer organization. There's over 300 chapters and over 11,000 members in the United States. And we educate through webinars and workshops that we give. And we do mentoring and counseling of entrepreneurs and small businesses. So why would you engage with us? Well, we do provide what we think is relevant and authentic information. As you hear from the introductions, we have a lot of expertise in the SCORE organization and a lot of people who have been through, shall we say, the wars of mistakes and can help people in terms of avoiding those kinds of things. And we have a lot of real world experience. So we would encourage you to contact us through sanantonio.score.org and set up a session to talk. So what do we consider the fundamentals of success? There's some personal, there's other, whether there's opportunities in terms of the business you want to get into. It's very important, we believe, to have the mission and marketing down as far as your business proposition is concerned. You need organization and support. You're obviously going to need money for a variety of different things, and to understand cash flow management and putting together business plans. So we'll get into that in a little more detail. So the first part is just a self-evaluation of your own self and personality, and whether you're really a self-starter, because if you own your own business, you're going to have to be, and you're going to have to work hard. Many people go into business thinking, I want to be my own boss. Well, if you have your own business, you're going to have plenty of bosses, and it's going to be necessary for you to be working long hours, probably. You certainly need to be responsible and organized, and really it's a strain from a health standpoint, so you need to keep your health up as well. You need to have a support organization behind you, not just your family, but also be willing to listen to people who have, shall we say, been there and done that before. So seeking help and advice is not a weakness at all, but really a requirement. So we believe it's necessary to focus the management on results. Process does play a significant role, but it's really the results that matter. And you need to manage for growth and for change. This past 6-8 months have taught us, if nothing else, that change is inevitable and sometimes it comes crashing in on you. You need to set your ego aside a bit. in running a business and starting a business. You also need to use your time extremely well, because there's just 24 hours in a day, and it seems like sometimes when you're running a business, it takes 36 hours. So build on your own strengths and the strengths of the people that surround you, and as we said before, keep an open mind and seek other people's opinion about things. We believe it's essential to have a thoughtful business plan. I'll talk about that more in a second. You need to have sources of funding, equity, capital, cash. It's best, if not required, to have management experience and ability in the field that you want to start. There's some people who have an idea about it, but they don't have any experience in the field, and the odds of them succeeding is less, shall we say. You certainly need to be able to take risks and be able to live with the consequences of those decisions that are made. Be able to work hard, as we said before, and Larry is going to address a little bit about the hiring of people, excuse me, a little bit later on. So there's three basic ways to get into business: to start one, to buy one, or to buy a franchise. These are the success rates that we have found. Actually, the SBA has found in terms of success. And one of the things I think that Chris Zeis reminded me of was that there's another statistic that's sort of negative, and that is 90% of the businesses that start without a plan, without a good, solid business plan, don't succeed. So we think it's essential that you do that. So some of the mechanical side of business structure or legal structure, you can, if you have a social security number, you can be in business as a sole proprietor tomorrow. If you got more than one person with you, or you have another person with you, then there's a partnership. Another structure is a limited liability company, or an LLC, which separates your personal assets from the company assets. And many people who are going into business who don't want to risk their personal assets, which as a sole proprietor you would have, choose an LLC as a structure. The other is a corporation, and you can get taxed in different ways, and John might expound on that a little bit later. We'd suggest you go to the texas.gov website, and under the Secretary of State, you'll find a lot of business startup information, including information about the formation of an LLC, which you could do on your own, actually, with a $300 fee to the state. But we'd send you there to get knowledge about what's necessary in that. There's also, if you want to operate your business in a different name that you have your legal structure, there's something called DBA, or doing business as, and that is a filing with the county clerk at the Bexar County. So bear.org is another reference that you could go to establish a name, or at least see the name that you want to use is not being used by someone else. So that's sort of the mechanical side, and the personal side of things. The next is really defining what your mission is, and the marketing that needs to be put together for your business plan. You need to have sort of a unique selling proposition. You need to determine why someone would buy whatever it is that you're selling from you, as opposed to something that would come from a competitor. So the considerations are the quality of what you're doing, the quantity and the selection, the variety that you provide to a customer or a consumer, and whether you're providing something in the way of new technology or innovation. We do think it's important for you to really spend time in defining what it is that's going to differentiate you, because that's going to dictate a lot of what you do into the future as far as the business is concerned. We recommend you do a lot of research, gathering information about your target market and your customers, how big it is, what the market trends are, what the competition is doing, and identify the clients themselves, the customers, and what their wants and needs and beliefs and how they buy. It doesn't do much good for somebody who wants to go into the restaurant business to use national statistics about restaurants. So the more local you can get in terms of, well, it depends upon the reach that you want to make as far as your company is concerned, but it's important to understand what's going on at the local level, excuse me, where you're going to be competing. we think it's advisable to build a team of advisors, a banker, a lawyer, an accountant, assurance agent, and a SCORE mentor. We say SCORE mentor because of the reasons that I've given before, but a mentor, someone, maybe not family or friends, somebody who can give you a real objective view about things and can give you the benefit of their experience in the field as well. So the number one reason after businesses start up that they fail is they just run out of money. They run out of cash, run out of capital. So it's important to understand what the sources of your uses are. Obviously, the money you put into a business, and if you've got some other either venture capitalists, angel investors, or other people that want to invest it with you, you've got that. There's loans that some organizations might need in order to get started. And then certainly the operating income that comes out of the business itself is a source of cash. So where's all of that going? It's whatever you need in order to start up, even before day one of opening the business. There's always expenses that are associated with a startup. Excuse me, what your monthly expenses are, inventory if you have that, and the replenishment of that. The interest and principal against any loans that you have, and you might use it for the growth of capital. If you're successful, you may have to add to that asset list that you have in your business. Those are all the sources of and uses of cash. But really, in starting out, you really need to be very frugal and conserve cash as best you can. Everybody likes new, but when you're starting up a business, sometimes if you can contribute your own personal effects or personal items to the business, working out of your house, working out of your garage, purchasing used equipment, leasing equipment, leasing space instead of building. I advise, maybe others have their opinions, not to fall in love with real estate because it's not always location that has to do with the business. If you've done a good job in defining your mission and the points of differentiation, people tend to find you. So there are a variety of ways in which you can, and we suggest you do conserve cash in starting a business or running a business for that matter. Procedures are essential. The processes that are used in your business need to be lean, shall we say, and understood by those people that are interfacing with it. You should have a separate business account, bank account. You should separate the sales tax. The receipts that you get for sales tax is not really your money, so it's best to keep it separated. Some get confused in terms of, and when the tax people want their money, they generally get their money. So, and we think it's important for the owner to manage the cash personally on a, if not hourly, a daily basis, or at the very least a weekly basis, and create an information system, whether that's handwritten journals or cards you use or whatever, but something that tells you how the business is doing on a weekly or monthly basis. So what do lenders want to see if you get to the point where you do need a loan or you do need a loan to start up? The first thing they're going to want is to show me the plan. And they're going to want to know that you understand what's in the plan. So we certainly don't advocate somebody paying for a plan to be put together. It needs to be yours. Somebody who wants to view that will in some cases take it, set it aside and say, tell me what's in there. So it's best that you develop it and we can help with that process. They're going to want to see from 1 to 3 years, probably more like the 2 to 3 year monthly cash flow projection to understand how their loan is going to get repaid. They're going to want to see your balance sheet and your personal financials and what your personal credit situation is, in addition to your tax statements. So that's the minimum probably a lender's going to want to see. So many people come to the SBA and they refer them to us because they think the SBA has money when in fact they don't. What they do have is loan programs in which they guarantee a portion of a loan that goes to a business, which permits the banks or the lending institution to take a little more risk than they might otherwise. But in both cases, they're going to want to see a pretty well thought through business plan. There are some programs under which you can qualify for lower monthly payments or for less equity that's necessary for you to start. Excuse me. And they have loans that go as low, I think, of 50,000 as high as 5 million. But There's another site for you to visit. That's the SBA.gov to understand what the loan programs are. If you operate with a bank, most banks will have an SBA loan officer who will understand all of the programs under which you might qualify and tell you what's necessary. There are also something called community development lenders or micro lenders. Lift Fund out of San Antonio and People Fund are two. They do make loans where some traditional banks may not for startup operations. They can accept lower credit scores and can accept less equity. And as you can probably guess, as you get into those, excuse me, lower qualifications, the interest rate's probably going to be a little bit higher, but they do give loans on very small amounts to get people started. So those are two places to look for funding as well. We mentioned a business plan, and we think to be essential to put a business plan together. But why would you want to do that? We think it forces you to take an objective view of the business. You need to separate yourself sort of from the business and see it as an entity, and look for the kinds of things that we've talked about to this point. It should communicate your ideas. It tells a story, you know, what your experience and expertise is and what your vision is as far as the business is concerned. And the value of much of it just lies in the process of doing the research and the thinking through of what you want to do. It's much easier at the start than when you are working so much in the business you have no time to work on the business. So we think that's why it's essential to have a plan. So what's in it? It should be, in our estimation, a definition of the business, certainly, and what the vision is for the business. Identify the goals and what you're bringing to the business and the expertise. It's sort of the resume of the company, as we say. It needs to be directional. How any money that you're going to borrow in order to start the business is going to be repaid. It should be also used as a management tool. It should be what we consider a living document. It's not something that you put together, got over that, put it on the shelf, and never think about it again. Things change. Nobody's plan has ever been perfectly executed the way they planned it. There are modifications that need to be made along the way. It does take some time to do, but it's really essential to avoid mistakes down the road. Plus, it gives you ways in which you can determine whether the things that might come to distract you, shall we say, and whether they fit into the business or not. That's why a plan is important. So there are a bunch of sources of information in San Antonio. It's a pretty vibrant community as far as entrepreneurial support is concerned. We certainly are there. The Small Business Administration, the SBA.gov, a website we mentioned earlier, the state of Texas, the city of San Antonio Economic Development Department is another one, especially if you're concerned about licenses and permits that are required in the city. That's an essential stopping point. There's also a small business development center here that's associated with UTSA that do similar work to us. And the San Antonio Public Library is a great resource for the research that we talked about earlier. Launch SA is another organization that operates actually out of it's a joint venture with the city and Lift Fund, operates out of the main library, and they've got resources, and they put on pitch programs and other things that you should look up. There's also an organization for startups called Startup San Antonio, startupsanantonio.com. It's another resource for folks to be able to use. So that's a thumbnail sketch of things, pretty quickly done. I'd like to turn it over to the panel if there are folks who have questions. I don't know whether our chat or Hugh is showing, or Taylor, are you still around? Are we seeing any questions from anybody at this point?
Hey, Christopher. Yeah, at the moment we don't have any questions.
Okay. Well, I tell you what, I ripped through that pretty quickly. So there's some things that we maybe can go back and review a little bit. One of which I think is essential is the mission of the business and the marketing that's associated with it. And Steve, you've been in that field for a long, long time. What do you think the most important things are for somebody starting a business to concern themselves with from a marketing standpoint?
Yeah, no, let me chat about that. But as you might expect, there's no cookie cutter marketing plan that works for all businesses. Every one of them is really unique, and that's based on their business, their industry, and their customers and where they reside. But there are some basics that are required and work for all of them. And your SCORE mentors, all of us, not just myself, can help guide you through these because they've learned them throughout their careers as well. And a lot of times we'll co-mentor, we'll bring in several mentors in to help with all the different things that you need help on. But again, any SCORE mentor can help you with the basics of marketing. But you may not think of it this way, but even the big advertisers, the Amazons and the Geicos of the world, their biggest source of business comes from referrals and word of mouth, just like your small business is going to be when you start out, as well as when you get large and advertise. And so you need to have the basics to develop a customer base. And some of those things are, once you've got a DBA, as Chris mentioned, you're doing business as, you'll want to set up a Google My Business account, and that's free. But that's just like when you Google and you're trying to find something on the web for something you're looking for, that's how they're set up. And you will pop up eventually in Google's algorithm as people like you, use you, and review you. But it establishes you as a business. And then to further elevate that Google My Business, you need a basic website. It doesn't need to have all the frills, to begin with. It's just basic information about you, about the products and services you have, testimonials from existing customers. And ultimately, you're going to get reviews on Google My Business because you're going to forward your customers to there to rate you and tell the world how your experience was. And that's going to help you, pop up in the Google algorithm eventually as well. But it basically establishes you as a legitimate business. And then you're obviously you're going to want a sales sheet, whether that's a brochure, a bifold, trifold, or just a single sheet. But it's going to replicate, as Chris mentioned earlier, what's your value proposition? What makes you stand out? What are your products and services? Why are you different? And it's going to emulate what you have on my Google My Business, as well as your website and on the sales sheet. So when you've got your foot in the door and you're marketing to somebody, you've got something to hand them and really with the call to action, how do they do business with you? How do they sign up? How do they buy? How do they reach you for whatever service it is that you have? And then once you have these basics, the most important thing, no matter where you're at in your business, is developing a database of customers, knowing who they are, how to reach them, what's their email address, physical address, all those things, because managing your database and remarketing is how you become profitable. It's expensive to acquire customers, and sometimes it's okay to even lose money on customers, knowing that you're ultimately going to have, lifetime value from repeat business from them, as well as referrals. But it's understanding who they are so you can remarket and get additional business from them. And so you'll want to establish that database and understand how to use it for email and for social media and build it through all of those channels. And it's at that point, then you can start tiptoeing into, well, should I do advertising? Should I spend money on a Facebook ad to boost my post, or Google, or what it might be? But the key is getting, grassroots, built baseline of business, and then being able to measure those things. And the key is, sometimes you have to get creative on how you measure advertising, because it's not as simple as it used to be. You've got multiple channels that are driving business for you. And so, we can help you get creative on how you measure those so you're making good decisions. So, again, I kind of rambled on a lot of the basics, but you start with, your basic advertising that is free, and you garner business before you spend money. So I'll open it up to the rest of the team to chime in on that as well, and the participants can ask more specific questions in the Q&A below.
Okay, Steve, thanks. Chris Zeis, he touched on website, and people, at least a lot of the people that I talk to, get confused sometimes about the technology and the platforms that are available and the website content and SEO. And can you talk to that a little bit?
Sure, Chris. Want to just double back a little bit to what Steve said, because when you think about the goal is to drive new business, it always kind of leans back into the marketing stage of where you're at in your business plan. But the reality is that there's so much capability out there with things that have changed with privacy laws, with consumer protection laws. When you're dealing with taking credit cards over the internet, you have to have that coverage as well. And now I believe that they're offering insurance for identity theft and hacking and things like that. Well, you can eliminate that from your stack of problems by finding a young developer or somebody that you know, a friend, a family member, somebody that's in it, or hopefully that you know it well enough that you can move forward with a like reactive or responsive design that meets, we'll say, a computer version of a screen versus a phone version of a screen, something that will roll and wrap, but still offer the same capability as it would on any device that you use. That's important. And you're up against a lot of competition. So when you think about trying to go out and develop an environment, a lot of people that I deal with will say, hey, I have a domain now and I have a website. Okay, well, that's really not the driver that creates the business that Steve was talking about. That capability and determination to continue to strive is what really makes a business work, not so much the motto or the domain name. But it is the fun part. And I just would advise people to take it slow and not start spending a lot of money. Remember, the goal is to stay lean. So as you stay lean, you don't want to go into a bunch of subscription agreements in order to get your business started for business you don't have yet. So you have to kind of lean into it slowly, use some of the tools that some of the other businesses offer, like GoDaddy offers a WebKit builder, and the other ones they have out there, as Wix or different development sites. Sometimes you can even use Word or Apple Pages and develop your own website from scratch in a smaller, more, they call it an event model type, where you're able to then deal with resilient, reactive websites that meet device capabilities. Once that's in place, the next thing I would consider is, like Steve mentioned again, is your market. Defining your market and your number one customer is really important nowadays. If you think you're going to go out and compete with drop shipping with Amazon, sure, think that you can. You're never going to beat their price. And even on top of that, you'll probably never beat Walmart's price if that's the area of retail you're dealing with. So you have to say, okay, if I'm not able to beat that, then what can I do to get business? And that would probably be staying regional or district in your local area, the people that you know. Drive that business through a higher price, through a higher quality or higher value or close customer relationship and use your web model, and allow banks to use their part of the financial piece. So don't try to integrate your own version of a credit card taking system. Reach out to your bank, find out what they offer. They'll give you a link. You just plug that into your system, and now you can take credit cards over your website. So those considerations, I think I mentioned, cover just a few ends of what I would consider when you start to consider tech. And I'll leave it at that for more questions. Thanks.
There's one question in the chat box. If you all check that, I don't know who should answer it.
Yeah, I can answer that if you don't mind. The question was, what are the legal issues regarding saving customer data and privacy issues? And really the thing is, once they've inquired with you, they don't even have to shop from you. They've given you permission to market to them. So you, in essence, own that. But now when you do market to them, say, for example, via email, and you're using, say, a Constant Contact or a MailChimp or any of the email servers, it is required, and all of them have that as an opt-out link where they can unsubscribe. But you own that once they've inquired and signed up for you. And so you, as well as social media, they follow you, they can always unfollow you. But once they've done business with you, you have every right to be able to market to them in all channels until they decide to opt out. So that's why it's so important to understand who your customers are, what they bought, when they bought, and how to remarket to them in all channels, because that's the free advertising. Once you own that. And so then it's all at margin. And again, that's the key to being profitable, is database marketing.
Okay, that's great, Steve. While we're on the subject of some legal issues, I glossed over sort of the legal structures or business structures that you can have, and always we get questions about the tax implications of those. John, you want to try to define what the differences are, and if you need to go back to the slide show, I could do that if you'd like.
Yeah, please put that slide 10 up again, Chris, if you would.
Okay,
I'll try to
sure.
address the tax issues.
Let me get it. It's 10, right? Here we go. Okay, here, let me share the screen. Okay.
Okay, so I'd start by saying there's several different structures on here, and Chris touched on them a little bit, but the tax consequences of each depend on the structure that you choose for your business. And we'll open by saying that there's only one entity on here, entity type, that actually has the business paying the income taxes itself. And all the other, and that is the C corporation, which is the big boys like AT&T and Apple and all the ones that are listed on stock exchanges basically are doing that. And the downside of the C corp is that income gets taxed twice, potentially. First of all, the corporation, if it has earnings in a year, pays a 21% tax rate on that earning to the government. Okay. Then if it's an AT&T or any of the companies that have nice dividends to their shareholders, when they pay those dividends out to the owners gets taxed on it again have to pay it on their personal income tax return, capital gains basically. And so then you get to the other entity. So, and well, let me say this, that's why, part of the reason why we don't necessarily recommend a C corp structure or election for these small businesses. It's that tax may appear good, but by the time you take the money out, if you earn any, you're going to get hit at a rate that's actually higher than what you probably pay on a personal income tax level for most people. So then the rest of the entities, the sole proprietorship, the partnership, the LLC, and the S corp, which I'll address a little bit, are all what are called flow-through entities, meaning that the income flows through to the owners, and the owners pay the income taxes on that income, or potentially can take a loss if the business operates in a year and has a loss. So the simplest one of them all is the sole proprietor. And if you only have one owner in the business, then the IRS considers that tax structure is going to be as a sole proprietor, and you will file a very simple, what's called a Schedule C on your personal income tax return to report the revenues and the expenses and basically the net income of the business. And that net income flows into your taxable income for the year on your 1040, and you pay at whatever tax rate you happen to be in because of that. So if you've got a full-time salary, a W-2, your wife has a W-2, you've got a certain amount of taxable income, and then you're running a business on the side, or even maybe full-time, your gain or loss from that business as a sole proprietor then would either increase or decrease that taxable income. Now, we'll also say that if you have income, in other words, you have a successful year and your earnings are positive as a sole proprietor, you will pay self-employment taxes on that also, your Social Security and your Medicare, and you're paying both sides of it. You're probably aware, if you've ever worked for anybody, that you withhold from your wages, your self-employment, your Social Security and Medicare, but that the employer also pays a matching piece of that. So the total self-employment tax is about 15.3%, and it's applied to your earnings in that sole proprietor. Okay, so that's a single one owner business. Then you have If you have more than one owner, you have some options. Okay, the default for one owner, for more than one owner, 2 or more owners, is a partnership, and a partnership files a separate tax return each year, generally prepared by a CPA or some knowledgeable tax practitioner. We don't recommend you try to do those yourself because they're a little bit more complex. And what happens then is the income or loss that's generated from that business passes out to the owners on what's called a Schedule K1, which is an attachment to the back of the tax returns. The owners then take those K1s and enter that information on their personal tax returns, and it has the same effect that we talked about with the sole proprietor, where you're either increasing or decreasing your taxable income on the return because of that. That income may or may not be subject to self-employment taxes depending on your involvement in the business. If you're a partner who just contributes capital to the business but doesn't really work in the business, you're probably not going to be subject to Social Security and Medicare taxes on it. If, on the other hand, you work in that business full time and you're the one that runs it, you're probably going to need to pay self-employment taxes on that income. So the S Corp listed down below is a spinoff of the partnership. You've got to, well, you don't have to. If you choose to, you have more than one owner. That's not even true. I'm sorry. You can have any number of owners and still elect S Corp status, but most of them are partnerships who elect that S Corp status. And the main benefit of the S Corp is that income. Is that the members can pay themselves salaries. In a partnership, you can't pay yourself a salary. You just take the earnings, whatever they are, and you pay your taxes on it. You can take distributions of those earnings as long as you have money to pay it out. But in an S Corp, you can actually be on the payroll as an employee. Okay. You can have single member S Corps, you can have multi-member S Corps. But that's the difference in the partnership sole proprietor versus S Corp. Now, an LLC, which we talked about above, is the one that gives you the limited liability protection. That's why you register with the state, because you don't want anything that happens in the business to be able to go through the business and get to your personal assets. All right. And that's why you would file for an LLC. But an LLC by itself is not a tax structure and doesn't drive a tax structure. You start by finding out how many owners of the LLC there are. And if you're a single member LLC, you can elect to be a sole proprietor for tax purposes and file that Schedule C. If you're multi-member, then you've either got to file a partnership return or an S Corp return if you make that election. And it all goes from there into your flows through that income or loss into your personal income tax returns. So probably clear as mud, but hopefully that helps.
Well, that's
if you have questions.
That's good. That's good, John. Thank you. Susie, I just thought of a question for you, but before that, Larry, we also always get a lot of questions about, I consider it maybe a high-class problem, and that is that a business is successful enough that they need to consider hiring employees. And so what's that decision process like? And can you elaborate a little bit when you kick off mute about what the difference between a contractor and an employee is?
Yes, when you take that leap of faith and you stop using your family members and your spouse and working for free in your own business, trying to grow the business, and that's how they all do it. You decide to hire a person. Decision has to be made. Can I hire that person as an employee and withhold income tax, Social Security, Medicare, buy workers' compensation insurance, pay the state unemployment tax? Those are the main considerations in hiring employees. Do the record keeping, or can I just do it the simple way and call this worker an independent contractor? And by the way, there is no such thing as an independent employee. They're either a W-2 tax-paying employee, where you withhold income tax and send it into the IRS. you withhold Medicare, Social Security, and you match that 7.65%. So you're paying it and the employee is paying it, or they're an independent contractor and there's no tax consideration, no benefits. They're not covered by workers' compensation. You don't pay the state unemployment tax. So of course, it would be easy and great if all of your workers could be independent contractors. And believe me, many companies have tried that. And as soon as one of those independent contractors no longer works with you, they go down and file for unemployment. That is going to trigger an audit by the Texas Workforce Commission. They're going to wonder, well, why did this person receive money and we have no record of payroll or payroll taxes or unemployment taxes? And then the bag of worms is opened, and that statute of limitation goes back 2 years, and you may end up paying overtime, Medicare, Social Security, income taxes for a period of 24 months. And so those are some of the considerations. They're either a W-2 taxable employee, that's your employee, or they are an independent contractor. And one of the big decision things on that in the decision train is if they're an independent contractor, they have to be doing that for a lot of different entities. It can't just be them working for you full time, you providing the facility, the tools, the raw material, the supervision, and the managing. That sounds a lot like an employee, not like an independent contractor.
Okay, good, Larry, thanks. Appreciate that. Susie, you're a business owner and you're in physical fitness and stuff, and we're in well, it's an overused word now, unprecedented times, but much of the business world is going to be conducted the way we're conducting this right now, I think, and that's virtually. So what in your business, and what advice would you give to people, and what considerations are there for going from the touchy-feely world into the virtual world?
Thank you, Chris. Excellent question. And yes, absolutely. My business is a personal training business, and it was conducted face-to-face. Here comes COVID, and things had to change literally within a week, taking the business, transitioning it from face-to-face to virtual. Now, in that transition, there was a lot of research. It goes back to what everyone has said, Steve, as well as Chris, that you're having to take the time, and Chris said it early on, having to take the time and do the research to find out what's going to work best for you, your services, and your business specifically. So it's researching the best technology in terms of a laptop, a desktop, an iPad, what's going to work best for you. And the other hand too, is you have to be conscious of your clientele. What do they use? Are they, technically savvy? Are they going to be able to make that transition with you? So it's, once again, knowing your clientele, knowing your market is very, very important. Once you've established what type of equipment, and there's several things within that, is the platform. What type of platform are you going to use? Are you using Zoom? And I spent a lot of time researching what is going to be reliable, what is going to be effective for the services I provide. And another thing to consider within that platform is not everyone wants to do Zoom, is what I've learned. So, and other individuals want to do Skype, others want to do FaceTime, others want to do Facebook Messenger. So I use all of those platforms. So it's imperative that you do the research and learn how to be on both ends of the table, especially with Zoom. If you're the moderator on the other end, you have to know what it looks like when you log in. What are they asking? Do you need a password? Do you need things like that, so you can help guide your clients so that it makes the process more manageable, less intimidating. And so once you get your client in there, you want to make sure that they can hear you. That's super challenging. When you're instructing someone, you want to ensure they can hear exactly what you're saying to them. They're not struggling. They want to be able to see you. So you have to have excellent lighting, test it out. So there's no shadows, and they can see what you're doing, so they can ensure they're doing the movements correctly. And at the same time, you also have to be sure you can hear them, you can see them, and guide them so they, can put their laptop or their iPad or their phone, appropriately spaced so that you can see their full body, whatever it is you need to see. The lighting, the audio is important too. Like I said, being able to hear them. Sometimes if they're standing back so I can see a whole view of them, they're not, I can't hear them way back there. So we find ways to address that, whether they get a little headset or something of that nature, so they can make the session more valuable. And that's the key. When you have a business and you're providing a service virtually, you want to ensure it is as great as it was when you were right there in front of them. And the other aspect of that is what I had to learn is being face-to-face, fantastic. I got it down. Virtually, that took some work to be able to present, explain, modify, instruct, everything to the T, versus when I can be there in front of somebody and actually tell them and move them. So did you have something to say, Larry?
Susie, you've been doing this virtually now for 8 months. We all have. Can you, generally speaking, how's that worked out for you? In a general sense,
yes.
how's it been?
I have to say that early on, it was somewhat challenging to get some of the individuals on board. And I have to say this, the majority of my clients are 40 and over, mainly female and retired. And so at first it was a little challenging to get those individuals online. What is Zoom? I'm not sure with the security situation. It's kind of clunky. I don't think I'm going to get enough out of it if I were in front of you. But I think when they realized that, this thing is going to be around for a while, they were much more open-minded to say, okay, what can we do? Let's try this out. And that's what I did. I spent many of hours, times cumulative, should I say, testing things out. So, let's try it out. Let's test it. Let's get online right now. Let's see, can you hear me? Can you, and that was all done just to get them to feel comfortable with the process. And so in answer to your question, it is going very well. And what I've been doing, and it goes to what Steve and Chris have been saying, and as well, Christopher and Chris, is that now I'm transitioning my marketing. At first, I was face-to-face. Now I'm having to challenge myself with expanding my marketing to a virtual world. And I didn't do that before. So my marketing plan has shifted and changed. And now I'm exploring those options and how to increase my business on this and on the virtual end.
Thank you very much.
You're welcome.
Yeah. Okay, Susie, thank you for that. That's enlightening. That's very good. Chris Zeis, could you introduce your puppy to the audience?
Yeah, this is Shalbella. She's been around with me forever. She keeps me happy and correct on things.
Right?
So when I'm not doing something right, she'll let me know.
Good. Well, I don't know that we've got any other.
Hey, Chris, the dog is the brains of the organization, isn't that right?
That's right. It doesn't take much to run my kind of stuff, and all I need to do is have something to keep me in line.
Yeah. Okay. Taylor, are you there or two? I guess the.
Yes, I am here.
We don't have well, other than you participating. I'm not sure we have other participants in this, but so I don't know if there are other questions. Go ahead, Susie. You had something?
I did want to say that I've had clients through SCORE and others have asked me, what are my thoughts on joining professional business organizations to help gain clients, to put the word out there. And I think it was a great question. But what I would caution individuals to do is explore and do your research. Look at that organization, visit a meeting. Now the meetings are done virtually, so it's even a little bit more accessible. Talk to some of the members, see how they feel about the organization, if they've benefited. Look at the cost. Some of those organizations, they're pretty pricey to join. And the other thing is there are commitments when you do join some of these organizations, referral organizations, to grow your business. There are not qualifications, or requirements to attend certain meetings, to do certain number of referrals. So I'm not saying it's a good or bad idea. I'm just saying do your due diligence to do your research, and hopefully to get the best out of whatever you invest financially or time-wise for your business.
Okay, good points. Good points. Sorry, Chris, you had something you wanted to expound on that a little bit? Chris, you had a comment in the chat?
Yeah, I had a comment that I was trying to answer a little bit earlier to one of the questions about data. You hear this all day, every day, especially during COVID. You hear about personal identifiable information. Well, the real number that you're looking for is just trying to mitigate. There's mitigation of risk and there's avoidance of risk. And if you can try to eliminate holding any customer data that is actually a credit card number, say for example, something that could tie you directly back to a purchase what that customer made, then you would want to avoid holding that. And throughout, like anybody that's talking about doing work online, make sure that that information is safeguarded or kept within an institution that is the provider of that institution. Your bank, all the banks that I know offer a solution for this. And there's also other online services like you've heard of Square, you've heard of Apple Card or Apple, Google Pay. They all have services that do this as well. Let them do that. They have the infrastructure and the security behind it to manage that data. And that goes true with medical, that goes true with other data that you know that you probably shouldn't have or retain, because it's likable in these days and times. It's likable. Somebody wants to get access to the information that you have in your business, they can. And there's nothing you can really do to stop them. So the way to protect that is to utilize those services in order to make sure that they have the defenses to manage that. And also you're not liable for that information. You might hear a lot of insurance companies right now that are selling like cybersecurity insurance. And you see, that seems kind of strange that you would pay for cybersecurity insurance. Well, if you're in a business and your business is big enough, you might involve that or self-insure in case you got hacked. But the reality is that information just needs more attention to. Don't keep it. Keep information that allows you to manage your customers, your customer base, like Steve said, with phone number or information that you have that's simple and easy. But when it comes to account numbers and those types of things, keep those away from yourself, and that'll keep you from having to deal with get your business closed down if you were to get hacked.
That's great advice, Chris. Yep, good. Thank you. Okay, Taylor, are you there? I think we've probably run out of our time, haven't we?
Yes, I am still here.
Okay. Is there anything else anybody has to add?
There was no questions that I've seen
Yep.
coming in yet. So
Okay.
if y'all feel free to wrap it up, then
Okay.
y'all were good to wrap it up.
Okay. Thanks, everybody. I appreciate it. Okay.
Thank you.
Thank you, Chris. Good job.
Thank you, guys.
Thanks, guys.
Thank you.